Hello traders, it's Cousin Vinny coming to you from theclosingprint.com on July 30th, 2017. In this edition of your weekend video newsletter, we'll discuss the indices and why this is nothing like 2007, like many people are discussing currently. The indices did find some trepidation at highs, which was to be expected as we traded along that upper trend line in the SP 500. That said, the New York Stock Exchange did eke out a gain of 0.25%, as did the Dow Industrials at 1.16% on the back of Boeing and Caterpillar, which helped the Dow beat the averages. FTSE was down, Nikkei was down, and Hang Seng was up for a third week in a row. The S&P 500 now is up 10.24% year to date, with earnings continuing to come in better than expected in most cases. Junk bonds are up 5.65% year to date at 52-week highs, and the bond stock ratio continues to be bullish. Here is a chart of the S&P 500 for the past 20 years. And the reason why I chose 20 years is because it encompasses both the run-up into 2000.com and the 2007 financial crisis. The period between 1987, when I started trading, and 2000 was a secular bull market, not unlike what we're seeing currently. There was some commentary this weekend that I thought was amusing regarding a potential top similar to 2007, which you see right in the middle of the screen. 1576.09 was the top. And some of the similarities and dissimilarities are very evident. RSI began to drop precipitously, whereas right now we're seeing RSI trending higher, much like we saw back in here. We are above the 70 level. Price is above the inclining 30, 40, and 50 monthly moving averages. MACD has turned up, whereas in 2007, this had peaked and started turning lower. So that's a difference. Stochastic is also trending lower in both cases, 2000 and 2007, whereas we're embedded currently. Additionally, New York Stock Exchange advanced decline. Note how we were declining from 1998 into 2000. Breadth was deteriorating as the markets moved higher. So, as we zoom into the daily time frame for the S&P 500 Spider ETF, we are trading in the upper half of this range, inside of this ascending channel or wedge pattern. We're above volume by price support at 244, more or less. RSI is above 50, hovering just below 70, so that's pretty strong. Stochastics is embedded. We did have above average volume last week on the bearish side, so we had 2 distribution days here and 1 back here in June. So we have 3 total in the last 6 weeks. But most importantly, what I draw from this, with tick cumulative rising, this is telling us institutions are buying, not selling. The only way for this indicator to trend higher is if they're buying more stocks on the uptick than they are selling on the downtick. And this continues to give us an indication that they're probably sectors are showing some changes. Pause the video and note which sectors are improving the most. Although technology has been doing very well, strength also in food and beverage, energy, as we pointed out last week, in addition to metals and mining. There is a change of 8.35% the previous week, 721, to last week, change of almost 2%. So watch that change and pause the video for more. If you're trading international markets, keep an eye on these. There was some weakness in Sweden, Switzerland, Greece, and Argentina. As we noted, watch for areas where there's strength. If we do find a bounce at this major volume by price band in transports, look for airlines, which saw a lot of call sweepers last week at the lows, trucking, shipping, and rails to improve. If they do, that would be good and a bullish sign. As we saw Caterpillar and Boeing beating earnings, those products that they produce must be delivered. And supplies for those companies need to be delivered. So that should also affect industrials. And if those two improve, industrials and transports, that will affect this particular chart, the Dow Jones Composite Average, 65 stocks in industrials, transports, and utilities. Obviously, you need utilities to produce the products, electricity, coal, etc., etc. So utilities do figure into it. If this breaks to the upside, that would be bullish, and if it breaks to the downside, that would be bearish for the markets. Though I do have to lean somewhat on the bullish side, looking at the Dow Industrials pushing higher on the back of earnings from Caterpillar and Boeing. And if we take out 62.26, we'll be looking to add to this one. Bollinger Bands would open up, and that would give us a nice opportunity. Okay, traders, that's going to do it for me. This is Cousin Vinny coming to you from theclosingprint.com with your weekend video newsletter. I will post a watch list shortly, give you a chance to watch the video and give me your thoughts and feedback in the trading room. I'll also post some charts likely before the opening bell tomorrow. Good luck. I hope this helps. Take care, and we'll talk to you soon.